information that comes in. It's about understanding the information. When we look at a barcode contains information that is scannable for computers to read. The distance, the width, where it is in the structure is very, very important to a barcode to give the correct information. It seems on the face of it to be an incredibly complicated idea, yet it's achieving a very simple result. It's an ability to very quickly, instantaneously scan across a piece of information and tell you what that information is all about. It can lead to all sorts of things. It can lead to a change in your stock levels when you scan it, because maybe it's a sale. So when you scan a barcode, the sale goes through, and that's one of the things that we can start recognizing. And one of the key ideas of a barcode is that it's just information. It tells you a price of an item, and from that price of an item, it then goes on to tell you what else. Well, it goes on to tell you something else, doesn't it? It goes on to tell you about stock, because if you scan it out, that's a stock being reduced, so the stock inventory software gets automatically updated because of that information that comes in. Now, max code isn't actually in a lot of ways that much different. Now, it's not telling you that something's £9.99 and that reduces the stock, but what it does do is it tracks data. Now, a lot of people kind of wonder about the process. At its core, what Max is looking at is Max is what I have always done my whole entire career, and that is track algorithms. My whole career has been based around on hunting down algorithms, hunting down Goldman's algorithms, hunting down Merrill's algorithms and Morgan Stanley's and Deutsche Bank's algorithms, hunting those algorithms down and then making money off of the fact that we've now found out what they're going to do next and do it before they do it. So when we hunt down these algorithms, this is one of the core aspects of these types of projects. That's what Max does. It hunts down bank algorithmic activity. And it says, right, this is what the banks are doing in these areas. It doesn't tell you what price. It's not got an exact price on this chart, is there? There's no way of knowing what the exact price is. But what it's doing is it's tracking algorithmic activity in terms of how it's being structured on an R-squared basis, on a volume and value basis, and on an order flow basis. This is why we loop it round to a signal coming out of NinjaTrader, for example, for the order flow aspect of trading. So when we see these codes, this is telling us that Max has detected algorithmic buying on the crack spread. Algorithmic buying on the crack spread is in blue. Algorithmic selling on the crack spread is in red. You can see there's a little slither of red right there. So there was an algorithmic seller on the crack spread right at that price. Now, what does that mean? Well, it means that there's a buyer on the crack spread and there's a seller on the crack spread. But if you understand the way we trade and the understanding that we have of the crack spread, that one of the key aspects of the crack spread is very simple. The crack spread buyers usually way over 90% of the time signify that oil prices will be falling, and if a seller comes in the crack spread, that usually signifies that oil prices will be rallying. Well, this is also an outright oil signal. This is an outright oil signal. So our job is to see that Max is detecting buyers on the crack spread and saying, okay, well, how do I get into a short oil trade? How do I find a short oil trade? You start drawing some straight lines. You start looking at your order flow tape tools. You start looking at your leans, your Voltics, your blocks that you've got on your screens and say, right, where is that trade? I need to know. And you start the hunt. The hunt for Red October begins. Now remember, this is the opposite to oil. So when this is blue, you sell oil. When this is blue, you sell oil. When it goes red, you buy oil. You start hunting the oil trade down, and you start looking for what Max is looking for. You start looking at what Max is seeing, and you start getting ready to execute a trade against it. Now, when you see that, of course, all of a sudden it's just going to appear. it's something that's been scrolling across on the right-hand edge of your charts, and it hasn't had any more trades. I was hoping I would have seen one or two so that we could have dived into the narrative, but it's not happened, so I can't make it happen. So when we understand that this is max trades kicking off in the background, or not max trades kicking off in the background, this is max algorithms. Max has detected algorithms kicking off in the background. Then, of course, you might be asking yourself, well, how did these trades do? Because these trades have all taken place after I did a classroom on it this morning when I was talking about this very subject. These are max sells. This is a max sell. These are max sells. And this is a max buy trade at the very end. The red line is an oil buy trade because it's a crack sell trade. Let's take a look and see if you could have potentially have made money using max on oil. It's a big question, because if you wouldn't, then of course you wouldn't bother buying into the project. You wouldn't be using the product, and you just dismiss it as a, well, it could have been good, but it's not very, that type of dismissal. So we can obviously look at today's markets, and again, it's a right-hand edge narrative. You see itself, it'll flash on and off, and this is a 1 minute chart. So it's a short-term spring aggressive type trade narrative. But let's take a look and see if any of these trades could have made money for you guys. It's important. Let's take a look. When it goes blue, you're selling oil. If you understand that, one of the key aspects of this trade is very, very simple. That when it goes blue, you start looking for a short oil trade. Do you think you could have made money, guys? Do you think you could have made money by looking for a short oil trade when it goes blue? So it went blue here at 9 o'clock. And obviously, as it goes blue, you can draw a straight line across your charts. That's obviously a very simple way of being able to trade it. And you can say, right, I'm going to look for a possible sell in this area here. What do you think? What do you think, guys? Possible? Do you think you could have interpreted that trade as a sell trade opportunity? Do you think you could have been looking in the right area for that bit of business and possibly have found an opportunity? I think so. When it goes blue here, we start doing the same. We're obviously looking for a big volume up candle, preferably to find the sell trade. That would be an obvious volume storyline that we could add to this picture. So when it goes blue here, of course, it's just touched the top line. It's literally just touched the top line here. And you might say to yourself, right, Max is detecting crack spread buyers. I am going to take a sell trade here. When the sell trade drops, doesn't make a big splash, but it drops. And then the price goes back up and you start looking again and you say, right, we're back into another max trade at the top edge. Let's try it again. And again into the higher price. You make a wee bit of money and you scratch out and you say, this max is rubbish. What the hell is this garbage? This is just as bad as a Nietzsche and Scratchy. This is as bad as Elliott wave theory. What the hell's wrong with you guys? You've spent weeks in this, months in this. So we see another top edge, and sure enough, the price collapses after the sell finally breaks. Sure, it wouldn't have been too much of a stretch for you to work that price. It wouldn't have been too much of an inconvenience for you to keep working those top edge sells for 5, 10, 15 minutes to get the trade on for the ultimate payoff of $400 on that first swing reversal. As we go forward, we can obviously be watching for Max coming back out to play. And we can see Max goes again. Interesting that it's almost at the same price as before. The algorithms are buying the crack spread, and you say, well, I've got a big volume up candle right on the Max trigger. Get me involved, right? Get me involved. I'm not looking for a level 2. Damn it. Get me involved right now. Let's see what happens. Boom. Straight off. A big volume up candle. Straight into a substantial $300 profit. Bearing in mind, guys, this is a 1 minute chart. You've just seen 3 trades, and they're all roughly about the same price. They've all came in roughly in the same areas, and you start looking at that and go, wow, the algorithms really are looking for the right trade in the right area. And yes, there was an extended period of algorithmic buying during this period, and that seems to tie in with the fact that there's an extended period of top edge selling, interestingly enough. And we carry forward on the trades. 3 trades, 3 big swings, 3 big profits. And then we get another max signal phase. And we say to ourselves, right, okay, well, where are we going? Okay, what about a top line price? What about the possibility that this guy is going all in again on this top line up here? Another big volume candle appears and we start the process all over again. Is this the first bad one? Let's see what happens. Yep, goes up a little bit more. Is it the first bad one though? Well, not so fast, cowboy, not so fast. Let's see what happens. Let's give it a little bit of time and space. Max is still finding buying in the algorithm. It's not stopped. So we can still keep working those sell orders at higher prices. Max hasn't stopped just yet. And what happens? Boom. The price collapses off 3 higher highs and drops down from 84.40s to 84 evens for $400 profits. Again, you had to do a little bit of work for your money, Silver. You had to do a little bit of effort. Higher high prices, higher high prices, higher high prices. The first higher high broke down. The second higher high broke down. The third higher high broke significantly down. So yes, you could have easily have got stops at break-evens and got all the good stuff out of the way. And Max has done a great job of finding the algorithmic buyers on the crack spread, which is going to put a big sell into oil at some stage. And then when Max stops finding the algorithmic buyers, guess what happens? The price collapses because there's no algorithmic buyers. Good news, right? Good news. So what happens next? Max finds a bottom line seller. So what is that going to be? If it's a bottom line seller, that's a buy on oil, right? So Max is finding they're starting to sell the crack spread. Max is going to buy oil. Max is bidding the low prints of oil here. Do you see that? Max is going to buy oil. Let's see what happens. The oil price went from 84.05s to 84.50s for 45 more ticks profit on that Max buy trade. That's a pretty good outcome, isn't it? Max didn't hang about. There wasn't a protracted level of algorithmic activity at this price area. There was simply, we were in it and we were out of it. It's a great trade. Max has now provided us with some incredible trades, hasn't he? When we look back and we see the sell that we had over here and the sells that we had in this bracket and the sell we had here and the sells we had in that bracket, now the buy that we've had here, you've got to be thinking to yourself, this is pretty good. This is a little bit better than the Elliott wave theory that I bought for $1,500 last week or last year or 10 years ago. A little bit better. It's finding some very, very interesting trade areas. It's not even a wave 5 of a wave 3 correction, which is good news. And as we go forward, of course, this is the trade signals. This is what we're looking for. So that max buy trade has just gone 84s all the way up to 85.22, 85.22, 85.30s. $1,000 of profit on a single contract off that last buy trade. $1,000. And you can see Max hasn't found any other trades since then. $1,000 buy swing off of that narrative. Now, if you don't think that's very good, I don't know what you will find good, because I'm going to be at a loss, to be perfectly honest. But you can see the idea that Max is a concept, the idea that Max puts in a lot of effort to find the commercial activities of the big boys. We can see that there are areas and there are spikes of activity. It's not a single concept. It's not a line extension that was, Cooper was asking yesterday about the line extension. It's just a line extension. It doesn't mean anything. It's just the liquidity of the level that Max is looking at. That's all it is. So it's the idea that it's 10 or 5 doesn't make an awful lot of difference. You know, I hope that makes some sort of level of sense, because we don't know how long this protraction is going to be. It could be 5 minutes or 3 minutes. So when we understand this, this should start to make sense. The idea that the max code is trying to give you as traders information that you can decode into trades. Decode into trades. Well, Sam, yeah, I mean that's why I've got that's why I've got it listed as max oil crack spread, so that you know it's a buy on the crack spread or a sell on the crack spread. That was all. That was the only reason. I know that I said that to the guys in the room this morning, that if it's blue, it's going to be a sell on oil, and if it's red, it's going to be a buy on oil. But bearing in mind, we're trading the crack spread. We're not trading it in oil, because this was the crack spread algorithm. But obviously, if we're going to be buying the crack spread, it's going to put a big sell into oil prices, and that's why it's blue and red, the wrong way around. So there you have it, guys. That's the max program. That's how it's playing out. This idea, this concept, would have made you, on a one lot contract basis, would have made you somewhere in excess of about $3,500 since the London Brent market opened today. Maximum swings, of course, maximum swings, and I know, I get it. Everybody gets annoyed when I call the maximum swing profit, but what am I supposed to call? You know, I've got to call what the maximum swing potential was on the trade. If you want to take 10 ticks out of it, you take 10 ticks out of it, whatever. But the idea is there, guys. The idea is obviously incredibly powerful to be able to get way into the high 90s correct, and I have very strong, easy stop out for when you're wrong. Being able to make some consistently great money. And if Max comes up with any crack spread trades today, guys, I'll give you a shout. I'll give you a shout. You'll be able to see them happening. Do they always win? No, of course they don't. Nothing always. If they always win, guys, I'd be getting offered billions of dollars for this program, because it's a non-arbitrage arbitrage. And I'm not getting offered billions. I'm getting offered millions, not billions. So it's not an always win scenario. There's still some sort of a requirements to figure out. So it still takes work, some work, guys. Still takes a little bit of work to figure out what's actually diddling in the background.